Welcome back, investors, to Ticker Time News. I'm Adam, and think about this. If the global semiconductor market is buckling under the weight of supply chain disruptions and waning demand for mobile phones, then Qualcomm, ticker symbol QCOM, clearly isn't feeling the effects based on its upside Q2 22 results and bullish outlook. Actually, momentum appears to be building for the leading chip company, validating its strategy to expand into new markets such as automotive, industrial, and Internet of Things. The decision by its CEO to focus on the higher end tier of the handset market is also paying dividends as Qualcomm's content per device increases at major OEMs like Samsung. Now, there were a couple of focal points during Qualcomm's earnings call. Demand remained strong across the entire business, and Qualcomm is no longer just a communication company serving the mobile phone industry. And these themes are illustrated by several data points. In its traditional handset business, revenues jumped by 56% year over year to $6.3 billion, driven by increased volume and share gains in Samsung's Galaxy S22 phone. To put these share gains into perspective, Qualcomm's premium tier processor volume for the Galaxy S22 was about 75%, compared to about 40% for the Galaxy S21 version. The main takeaway is this: even if global mobile phone shipments fall, Qualcomm is well positioned to grow since premium 5G enabled phones require an increasing amount of computing power. Looking at a new market for Qualcomm, the Internet of Things vertical, it was a standout, with revenue surging by 61% year over year, fueled by growth in each of its subcategories: consumer, edge networking, and industrial. Of these subcategories, industrial generated the strongest growth due to robust demand for connectivity and advanced processing at the edge. Qualcomm's CEO specifically highlighted strength in ruggedized handset devices, which are used in warehousing, logistics, and healthcare settings. Other trends that emerged from the pandemic, such as the work from home transition, are also still benefiting Qualcomm. In particular, the need for faster connectivity is creating a tailwind for its edge networking products as workers migrate to Wi Fi 6 and Wi Fi 8 technologies. Now, the automotive business is still relatively new for Qualcomm, generating revenue of $339 million in Q1. It's growing rapidly though, at 41%, and is poised to become a much larger contributor. The design win pipeline grew by more than $3 billion since last quarter, now totaling more than $16 billion. Qualcomm's Snapdragon digital chassis is the primary catalyst behind its growing design win pipeline. The cloud-connected platform enables advanced driver assistance, as well as powering digital cockpits and telematics. Qualcomm's impressive performance does alleviate some concern that the semiconductor industry is in the midst of a downturn. But to really know, we'll need to see the earnings from other chip stocks like Broadcom, Nvidia. But thanks to Qualcomm's diversified business model and multitude of growth catalysts, Qualcomm has emerged as a leading semiconductor company in a highly competitive field. What's your favorite semiconductor stock and why? Let me know in the comments below, as your comments help us all to better understand. Help us out by smashing that like button, sharing this video wherever you can, and click the first link in the description to join us in beating the market. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.